So today for class, what I want to do a lesson. And the lesson is going to be predicated around the trend trades, and we can do edge trades too, which is fine, but I want to go through how to study history. Because if you watch the live market, you're only going to get 4, 5, 6 trades in a day. And for some of you who work for a living or you can only trade part-time, one of the most difficult things is getting in enough repetitions. And before you start doing market replay, and again, I'm talking about doing market replay like this video, where you download data and you're doing market replay. Before you do that, you have to make sure that you have the look correct for a trade. So I'm going to try something a little bit different, and it's going to be a historical study session. Now, I'm going to go on the assumption that you know two things, okay? That you know that if your 14-2 chart triggers are below and you've got tails, that you have the potential for a trend trade. And then ultimately, if your small triggers are above and going up and you've got tails, you've got a potential for a trend trade. So, can we all agree with that from our 14-2 trigger line reading? Because the rules state for a trend trade that the 14-2 chart must have the correct trigger line configuration, which is this. Okay, this is step number 1 for identifying a proper good trend trade. So step number 2 is let's make sure we're not at a terminal spot. A ton of fibs or a prior divergence high from a big chart. Everybody understand that? So again, we're going to make sure that we don't have one of these things right here. Well, I won't go through each of them, and again, you can study them. If you have the 14-2 chart running smack dab into a fib, like support or resistance, then we're not going to do trades. Everybody okay with that? And again, you can see these key areas from an 8-2 chart as well. So my intention is to try to give you the ability to study with the least amount of indicators possible. So what I want to do is I want to take your 14-2 chart, and I want to change it, and I want you guys have this template. So when you're doing some study work, I want you to do this. I want you to right click on your chart. I want you to go to templates, and I want you to go to load. And I want you to load the chart template that says 14-2 triggers only. And just say okay. And what this is going to do, it's going to eliminate all of the fibs from your chart. So you're not going to have any fibs. You're not going to have any other indicators on your chart to work with, okay? And what I want you to do is I want you to do one thing, okay? And again, if you hit F12 on your chart, that's how you draw text, by the way. So you can draw text, which we're not really going to do much text. If you hit F11 on your keyboard, nope, I lied. Control F11 on your keyboard, you'll draw a circle. And if you draw a circle on your chart, what I want you to do is double click on it. And again, look, you can make it whatever color you want. If you want them yellow or if you want them white, obviously all of these are white. So anyway, however you want to do it. You can make them a little wider. You can make them solid. You can fill in as dark or as shallow as you want. And what I want you to do is I want you to take that circle and set it to all charts. So that way when you draw a circle on the 14-2 chart, you're going to get the circle to draw on all of the other charts, and I want you to set default. Is everybody okay with that? And again, I want you to do this so that way we can go back in history and we can study when do we have the small triggers in the right look. So again, we're only going to deal with the 14-2 chart first. Now, I promise we're going to go through all three charts, okay? So the rules are 14-2 chart trigger lines must be correct. And that means small triggers going down with a tail, small triggers going up with the tail. Everybody okay with that? Easy. Rule number one. Rule number two is we're not running smack dab into a bunch of things that could ruin the trade. So we'll see that on our 8-2 chart, which we'll use. I am recording this, Jomo, so you'll be able to play it back. So, and again, what we're talking about is how to study history, because if you don't know what 2 plus 2 is, you're never going to get 4. So think about how you studied when you were a child, and remember flashcards. I know they don't do a lot of that anymore, but flashcards, they had 1 plus 2 is 3, 2 plus 2 is 4, 3 plus 2 is 5, and you would just do flashcards over and over and over again until it's ingrained in your memory. And again, that's what we're doing here. We're going to ingrain these rules in your memory. So the rules are simple. 14-2 chart triggers. And again, you know, these are your triggers. So everybody's okay with that rule, right? We're going to move on. The second rule is nothing is in the way, which we'll deal with as they come along. Okay. Number 3, 8-2 chart trigger line filter for how deep or shallow the retracement will be. So I want you to think about our trading rules. There's 2 charts that we have that depict the 8-2 chart. Well, I mean, there's a couple of them, but 2 that we really can chomp into. Okay. The first look, and again, this is a really good picture because it's representative of all 3 things we're going to do. We're going to make sure that we have the small triggers going up on the 14-2 chart. We're going to make sure that we have the 8-2 triggers, small triggers above the large triggers. And then we're going to look for the 3 components on the 5-1 chart that create a trade. Fibs, midband, some type of support, plus the fib to fib oscillator at 25 for a buyer, obviously 75 for a sell. So is everybody okay with this? We're only going to look at the triggers with the tail first. And what I'm going to do is I'm going to go back in history. And again, look, this is with the benefit of hindsight. So again, it's like doing flashcards when you're young. If you don't know what the 2 plus 2 is, you'll never get 4. So you have to know the rules and be able to see the rules, and then you'll be able to start trading the rules. It's really a good natural progression. So what I'm going to do is I'm going to go back on the chart, and if anybody wants to stop me at any point, please feel free. Okay? So look, this circle is where the small triggers are up and transitioning. See how I drew that in? Just a little circle. And again, what this will do, I want you to see it. This circle, or this circle, or this circle, or this circle, these are all favorable trigger line conditions on our 14-2 chart. Smalls down and below, smalls down, smalls up, breaking above, smalls number 1 look. Everybody okay with that? What these circles will do is they're going to go in on our 5-1 chart, and they're going to automatically draw. That's what we're going to do. We're going to go back and study. Everybody with me? Give me a little Y in the room. I just want to make sure you're with me. If anybody has questions, let me know. Because our objective is we're going to go through this. We're going to establish and find trend trades that I wrote this for me, of course, so I'll use it in the first person. Trend trades that I will take 100% of the time, no matter what the outcome is, win or lose. If you don't have that initial statement in your brain, I'm going to do this trade no matter what, you always have a sense of doubt. And any little sense of doubt in your brain when you're day trading is going to cause you to do bad things. It's going to cause you to get in early, get out late, find some reason to get scared and get out or take profits early. So again, it's ingraining the 100% look in your head. So I'm not saying you're going to win 100% of the time, but you're going to ingrain the 100% look. Does that make sense? I don't want anybody to think you're going to win 100% of the time. You're going to win a nice percentage of the time. I mean, you should win 60 to 75% of your trades. I think everybody who's had our software who does only high probability trades agrees with that number. All right, so I'm going to go back. Now, we will add in one more component after the trend trade component. So again, I want to focus on the trend trade component of it first. So look, I'm only going back in history, and I'm only finding favorable trigger line conditions with tails. Okay? Where the small triggers are physically above or below all the other triggers, and we've got a tail. And look, right here, this doesn't count. Look right here. I'm going to draw X on it. Yes, they're all going down, but the small triggers are in between. You see what I'm saying? So, yeah, they're all going down, but I'm going to put an X on it because that's not the correct high probability trigger line configuration. Everybody understand that? It's pretty, but we're not going to talk about when to break rules. We're going to only talk about when everything is right. You can break rules on your own later after you're done with me, right? So look, this right here is representative of a perfect look for us to take a trend trade. Agreed? All the triggers are going up. And maybe even right here, the small triggers are really strong and breaking through. So you see what I'm doing with this? And again, you're not going to have to do too much of this in order to find the right trades. Again, look, small triggers are in between the others. There's no trades. See how choppy it is? And again, you can start to spot choppy markets pretty easily because the triggers aren't going to be right. Here's one. Here's one. Now, we're going to go back, and again, I'll go through moderately quickly here, and you can see triggers are below, triggers are inside, so we don't get really good looks. Here's one. Triggers are really favorable. Again, it's always tempting to say this is one, but it's not. I mean, this could be a trade if it was coming from a fib, but that's another exception. So look, triggers are up, tail. Triggers are down, tail. Triggers are down with a tail. Triggers are down with a tail. Triggers are up with a tail. Everybody see where we're going with this? A little tail there, but not much of a tail. All right, so, and again, look, I'm going to go back, and then what we're going to do is we're going to go talk about rules. Where are the rules met for a trade? Where are the rules not met? So, again, look, I'll take this and I'll do something like this so I know exactly where we're at. So I went back to 524. And again, I don't think we have to go back too far for you to get the gist of this, okay? So 524 we're going back to, which is 5 days ago. And what I want to do now is I want to go back to that same spot on the 8-2 chart. And, again, when we look at the spots on the 8-2 chart, so again, this is just our starting spot right here, okay? So, again, this is kind of where we started the whole party from. So, we're going to look at the 8-2 chart going forward where the circles are. And I want you to think about these trades, okay? So, the comparison on the 8-2 chart, just to refresh your memory. There's two looks that we're going to have, okay? The first look is the small triggers are going to be physically above where we were. 8-2 chart triggers. Is everybody clear? There's two looks that you can have on the 8-2 chart. One of them is the small triggers are going to physically be above the large triggers, which means you're going to get in a little sooner. You're definitely going to take the trade over here on the 5-1 chart. The second look, and again, this is kind of a bigger version of it. If the triggers are really strong up above the large, you're going to go. If they start to get inside and below and they cross down, those types of tails are where we end up seeing our deeper retracement, our bigger tails, and then, whether we even get a trade or not, we'll see after that. So the ones that we're going to hyper focus on is the ones where our small triggers are physically above the large triggers. Everybody okay with that? And the reason that I say that is because I've made a visual on the 5-1 chart that is going to represent the look that we were talking about. And again, just to kind of give you a quick visual here. And again, this is something that I'm probably going to make some adjustments on the NinjaTrader platform to give us the ability to do this, but I wanted you to see what we're doing now. What we're doing is we're taking the 8-2 triggers, and essentially on an 8-2 chart, the 8-2 large triggers crossed up or down paint the background color. So that's already in the software. I've gone a little bit further and I've added in a little bit of logic that says that if the small triggers are above or below the large trigger, paint it green or red. That's the short version. Pretty easy. And all that means is that if the small triggers are above, it's going to be green on the 5-1 chart. And if they're below, it's going to be red. And what that's going to do for us during our study period is we're going to be able to see, look, this circle right here, to kind of expand it out a little bit here. So look, this circle, you'll have one trend trade where the small triggers are inside, and they're not below, but still inside, so that's good. And then one trend trade where you're going to have the small triggers that are physically below. So this background color right here is going to be green on the 5-1 chart. And this background color is going to be red. And again, I'm going to show you this on the smaller chart. Now, let's go back and take a look at the 5-1 chart. So again, let me go back to the 25th. And again, this is trend trade study, so you guys can see when to do trend trades, when not to do trend trades. So let me get us back to the 25th. And again, look, this is the representation on the small chart of what we were just talking about. So you're going to have a trend trade look, and the background color is going to be green when the 8-2 triggers are favorable. And the background color is going to be red when the 8-2 triggers are not favorable. Does that make sense to everybody? Because look, when you're doing trend trade work, one of the biggest things that people have trouble with is, there's a lot of lines on the small chart. And the 8-2 relationship, small triggers the relationship to the large triggers, Mike. If the small triggers are physically above the large triggers, it's going to be green. If they're physically below, it's going to be red. Cool? Got it? Okay, good. If you guys have questions, because I'm making a video, ask them, because those of you guys now watching the video are probably asking the same question. So if you have a question, just blurt it out, okay? So again, to take this back, just to repeat all three steps on what we're doing, okay? We're going to take trend trades 100% of the time, no matter what. And again, this is where you guys as new traders and new users of our software, you're working through the process of which ones win and which ones lose, and how do I spot the difference between the two, and where do I get in, and why do I get in? right? That's the whole process of learning. So we're doing the historical study. Tim, I did this, so let me go a little further, since you guys do have questions. I used a third-party program. Okay, there's a third, Jeremy Tang and I worked together quite a long time, but this is a third-party program called Shark Indicators. And what it allows us to do is it allows us to take different criteria and paint the background color. So here's the criteria. Let me just show it to you. It'll make things easier for you. Watch how simple this is. So I used one simple solver in the Bloodhound. And it says, look, let me show you over here so you can see the code. Look how easy this is. It says that if the small triggers, which is indicator A, again, let me just show you how easy this is. So does everybody see that? The T3 trigger lines is the indicator, and the small trigger, which is the faster line, okay, is above or below the large trigger line average. So remember our large triggers? So what this does is if the small triggers are above or below the large triggers, paint the background color. That's all it says. And again, David, the reason that you have confusion is it still goes up when the background is red. Why? We're not actually contemplating why it goes up when it's red. What we're trying to do is get to a rule. Okay? Look, what's the rule that you're going to use to do the high probability trade? So again, I'm going to backtrack one more time just to do everything that, So the first rule, David, is the large 14-2 chart has the correct triggers. David, stop guessing. Trust me. I got you. The 14-2 chart drives the bus. You okay with that? If you stare at the small charts, confusion will ensue. So the small charts have a lot of play and a lot of things can happen in between. Okay? So again, don't lose sight of the 14-2 chart. Most of our traders that have trouble and they start losing is because they don't stare at the big chart first. By the way, that's in the plan. Look. It says stay focused on the 14-2 chart first. The 14-2 trigger lines must be correct. Right? So it has to be one of these three looks, which we've already covered. Now, this is where we're talking about right here, David. Entering a trend trade on the 5-1 chart, which one is more confident? Which one is better? Which one is more likely to win? So the theory or the thought process that I'm trying to convey to you is that if the 8-2 chart triggers are more favorable and the 14-2 chart triggers are more favorable, that you will have an easier time doing trend trades on the 5-1 chart. If the 8-2 triggers are not favorable, you will have a more difficult time doing winning trend trades. So, did that clarify for you, David? So we're going to skip the ones that are red for longs, and we're going to only take green background color longs, which is representative of the 8-2 triggers. And vice versa. We'll only do red shorts when the 14-2 chart says short. So again, three things that we're going to do for our triggers, right? 14-2 chart triggers must be right. And by the way, notice the consistency. I go back and draw white circles on them. You know, I've done this for a long time. So 14-2 chart triggers are correct. The 8-2 chart triggers are correct. And then the 5-1 has fibs, mid bands, and the oscillator in the right spot. Okay? So look, let's go forward and let's look at charts. Because, you know, again, everything has to be translated to the chart. So look right here, David. This is where the market went red and green on the smaller chart. Does it really matter that it went red with this look on your 14-2 chart triggers? See how strong it is? This is a number one trigger line look. Can we agree to that one? This is the number one trigger line look where the small triggers are up strong above the large triggers, which are above the other triggers that are crossed up. So the fact that it went red on the little chart doesn't stop the market. So look, here's the small chart. So here's where it's green. Here's where it's red. It still goes up. Because of, and not to lose sight of, the number one trigger line look on the big chart. So again, we're going to go through and we're going to look at different scenarios. Okay? So is everybody with me? I know we spent 27 minutes kind of building this up, but again, the correct trigger line look with a tail on the big chart. Only those trades that have the correct trigger lines on the 8-2 chart. And then only the trades that have a green background with fibs and mid bands and the fib to fib oscillator in the right spot. So again, for longs, we need 25, and shorts, we're going to need 75. So again, look, I want you to see where the trades are, because again, the more you can see the rules, the easier your life is going to be. So the purpose of the background color on here is so that you can know without looking at the 8-2 chart that the triggers were favorable. Does that make sense? So I don't want to have to go 14-2 chart and then 8-2 chart and then 5-1 chart. I just want to look at the 5-1 chart. But I'm representing the correct trigger line look on the 14-2 with a circle. We've already done that work. Now I've represented the 8-2 trigger line look, which is most favorable with the background color, so we don't have to worry about that. So the only thing we need to do is look at our smaller chart and say, okay, how would we do a trade? So again, the rules for a 5-1 trend trade are pretty simple. I'll write them one time on here, but look, 14-2 triggers favorable. 8-2 triggers favorable. 5-1 chart pullback to, you know what it is, mid bands, fibs, 1-to-1s, the little yellow dots, and the fib to fib oscillator in the lower 25 or upper 25%, right? Lower 25, upper 25, depending on whether we're going long or short. Easy? Okay? So there's the rule. I'm not going to write them out 52 times. I'm going to know that you guys know the rules because they're written out already. There's about 7,000 hours of trend trade video rules that you can study, but once you know the look, 14-2 chart, 8-2 chart, 5-1 chart, you're going to get the right trade. So that's what we're working towards here. So again, do you see the trade? The background color is green. We pull back to the fibs or the mid bands, and the fib to fib oscillator, again, just have to, we won't beat up the fib to fib oscillator too much, but you can see it's at 25, right? So your trend trade long, since it's green background, should happen from the spot. So this is the spot. That's your long trade. Does everybody understand it? And more importantly, could you have made money? Now, one more pullback with the background color green, you're going to do one more trend trade. And again, the spot is, where's the spot? The spot is mid bands. You know, you got a lot of mid bands and fibs and pretty much every mid band there. So, could you have made 20 ticks with this first one? Yes, I believe you could. The second one, look, if you get in on the way down into the spot, what do you run into? Well, you run into divergence. So let's just say divergence is going to get you out of your position, okay? So you're either going to make 20 ticks. I want you to think about something for a second. Plus 20 ticks equals $200 on one contract. Everybody okay with that? Now, one more little nip into the plan so you don't lose sight of our objective, okay? Because your objective is to make money. If you have a different objective, please state it for the camera now. I don't know of anybody who's day trading that the objective is not to make money. So our objective is to be able to take a $3,000 account, to not put more than $100 at risk on any crude oil position, and to ultimately make $400 per day per contract with high probability trades. And if you can make on one contract $400 a day average, then you have the ability to make a ridiculous amount of money. But it's about consistency. The same trade, the same way, the same time, every single time without question. Yeah, right. I mean, the objective is not to catch every pivot. The objective is not to catch every trade. The objective, just, is high probability trend trade rules, which we're studying now. And the other objective is to take high probability edge trades, where we have, again, we won't go into that one yet, but, so the objective is to make money. Let's just put it at that, okay? And with that objective, right, we need to ask ourselves, what's the look that's going to make us do the trade? Can everybody agree that this first one would have made 20 ticks pretty easily? I mean, the low was, 75, and it went up to 58.10. I mean, that's a lot of money. And then, here's the other beauty of it. Look, as you're going long on the way into the area, and again, you have to believe that it's going to hold. You're going long at 90, you almost make it, but let's say we get out with divergence. Okay? Now, when it's red and there's still a circle, would you guys mind if I just put a box on it? Because I'm going to give you one more piece to the puzzle that we're going to do later. If there's a circle, but it went up, I'm going to put a box and we're going to put check market flow. Vittorio, the background color is representative of the 8-2 chart. So if the 8-2 chart triggers are above the large, it's green. If they're below, it's red. Okay? So I did this to make it easy so we don't have to go back and forth and look at all the charts. The small, Vittorio, maybe I'm not being clear. The small triggers on the 8-2 chart are physically above the large triggers. It's green. The small triggers are physically below the large triggers. It's red. You okay with that? We went through this, but again, I'll do it again. If there's confusion, tell me, because this is the rule right here. The small triggers are greater than or less than the large triggers on the 8-2 chart. That's the only rule. Are you okay? Small triggers. And again, I think this is important. If you don't get it, then say it, because that's why we have the class. Small triggers, which is the faster of the two moving averages, is either above, see above, or below the large triggers. The large trigger average, which is the slower of the two moving averages. So what that means is, physically, when you look at a chart, when the small triggers are above, it's green. When the small triggers get below the average, which is the slower of the two, it's going to go red. You okay, Vittorio? Yeah, I know we went through that 9 times, but I want to make sure it's really clear, because if you don't get it, you don't get it, and it's imperative that you get it. So again, look, trend trade long, very easy. Now, we're going to put check market flow on any red circles that we get, because we're going to go back, and if there was a market flow signal here, even though it's red, we're still going to take it. Okay? So again, think about the plan now. Trend trades that you will take all of the time, no matter what. You're going to place an entry order or a limit order at the best spot, no market flow needed. When the 14-2 triggers are perfect, when the 8-2 chart is in the best number one trigger line look. Small triggers on the correct side of the large, so I know we beat this up a lot. And then obviously an area on the 5-1 chart. Now, if we have a trend trade with the 8-2 triggers on the wrong side, we're going to use the market flow chart. So again, I made a little picture to this just so you guys can have a visual. Assuming you want to take a long trade, here, watch. So look at your 14-2 chart first, most important. Assuming you want to take a long trade, but your 8-2 triggers are below. In this situation, if there was a circle, let's say, then you would then look for the market flow to generate a signal instead of just jumping in. So do you guys understand that? And again, we'll look at this later, but I'm just going to mark them up. But the idea is, if it's red, but we still have a circle, we're going to check market flow, see if it gave a signal. Easy enough? Terry, your question is, if the objective is to make money and $400 on a $3,000 account, and your wins are 60% of the time, does that mean you can still net $400 on a $3,000 account? I will let the clients who've had our software for a long time answer the question. Trading one futures contract of crude oil, again, maybe I should clarify, just extra clarification. Can you make $400 a day with high probability trades on one contract? So I'll just let the clients answer, and you'll see the answer. And again, I guess I should ultra clarify here. If you're day trading crude oil, again, look, here's the most common commodities: S&P futures, crude oil. To day trade crude oil, you only need $1,000 in your account. So, again, to execute one contract, you only need $1,000. So if you have $3,000 in your account, you have 3 times the required margin to day trade one contract. All right, now, again, we haven't talked a lot about management, but, again, look, the other part of this, Terry, is that if you get into a trade at the spot, assuming you know the right spot, right, and that's what we're trying to get to, then you're going to start off, I want you to think about it, you're going to start off with a 10-tick stop. So your stop is going to be, from 74 down to 64. So this is going to be your stop level for a trade, right? We'll call it 10 ticks. And your objective from the level is going to be 20 ticks. So we'll go just say 73 to 63. 93, I mean. So you understand what we're saying here, Terry? You're only risking 100 to make 200. Now, our rules also say that if you get into a trade, the minute you get an up bar, you're going to then reduce your risk just behind the pivot. So depending on how good you are at your entries or how far it goes past your entry spot, sometimes you're only risking 2, 3, 4, 5 ticks, after the up bar. So instead of, let's say you're risking 4 ticks. So instead of risking 10 to make 20, you're actually risking 4 to make 20. So the risk reward drops the minute you have an up, 10 is the max loss. And then probably I would say 5 or 6 is the average loss. You guys tell me if you think anything different, but I think 5 or 6 after a pivot is the average stop loss. So in essence, you're only risking 6 to make 20, or, again, we haven't gone into this yet, but is 20 ticks all you could have made? Pretty easy to see that you could have made closer to, 30 ticks or more. But, again, when we take 20 and we do it twice in a day, you're done. You've already hit your objective. Okay, so look, let's just go forward now. I know we've set this up enough, and again, look, it's green background, mid bands, fibs, everything favorable. That's our trade. We'll get out if we have divergence. And if it's red and we have a circle, we'll go back and check the market flow later, okay? And we'll just write it on there. So again, here, let me copy paste this real quick, just so I can copy. Okay, look. So we have circle. And, again, look, sometimes there may not be a perfect hit of an area. So, we may say to ourselves, perhaps you didn't get a fill. Right? So if you had a limit order, let's say right here, and it didn't happen and you get divergence, then you didn't do a trade. So, again, whether you catch a trade or not, that's not what we're doing here. We're studying the look. All right. So again, remember the circles are representative of the 14-2 chart with a tail. There wouldn't have been a trade here. I mean, if you were going to go long, it would have been down here, at the area. So circle or no circle, there wouldn't have been a trade there. Maybe if you got to the support in the mid bands, there might have been, but there wasn't. Right? Agreed? And again, this is overnight trading right here. So here is your circle again. And again, look, this is overnight trading. So again, just to maybe take it with a little bit of a grain of salt, this would have been your sell spot, right? And we don't really day trade overnight, but again, if you would have went short at 85, could you have made 20 ticks before it was all over? And, again, look, we had divergence, so you would have been out of your position. And again, look, you wouldn't have been stopped out. You would have been very close, but you wouldn't have been stopped out. Now, we had another circle that we drew in on our chart. What color is the background? It's green. So this is the spot where we're going to check the market flow. Okay? We'll go back and look at that later, and we'll go back and check the market flow. Because if it's green, you can still go short technically, but you need another signal to get you in. You can't just get in at the spot. Do you understand that? That's all we're talking about difference-wise here. What we're looking at is, do you have the right trigger, and should you get in at the spot, or should you wait for a deeper retracement? That's all we're talking about here. Everybody okay with that? So again, we'll check the market flow. If it gave a perfect signal there, then sure, maybe we took it. Now, as we progress forward, mid bands and fibs with the red background color. What do you guys think? That one's pretty easy to see, agreed? I mean, that's obvious, isn't it? Mid-band, lots of red fibs, everything's good. That's a pretty easy look for us. And, again, look, it was red going into this, so you probably would have sold right here. And again, we could go back and check the market flow here too. Every day, Paul, is the answer to your question. We have a seminar every day. All right, so again, it was red. Obviously, the trend was down. And again, you can kind of see what happens. We hear, if there was a reason why this was a bottom, maybe you had some other long trades. But this is the one that represents a tail on the 14-2 chart, remember? And again, the 14-2 chart tail is going to give us our trend trade long, and you can see, look at the termination up here. Did you get a fill? This one's a little bit iffy too, right? Probably not. So again, just no trade, no big deal. Obviously, if we have a pivot stop out at fibs, we know what happens with that, don't we? So again, we didn't quite have a tail. Obviously, from a 5-1 chart all by itself, it looks like a short trade, doesn't it? And again, think about something for a second. There are extra trades that you can do. We're not going to highlight those today, but you can really start to see where those extra trades are going to come in. Now, remember what we said about this spot. We said that this spot looked good. Remember, I put an X on it because of the triggers, but they weren't quite right. Again, you're going to be able to do something that's really magical pretty soon. You're going to be able to say this. Due to the overwhelming bottom look on the larger charts, I can take the first more assertive trend trades. Now, whether or not the 14-2 chart looked like that or not, but if you have an overwhelming reason why you have a top or bottom, you're probably going to do this one. Do you understand what I'm saying? Even with the 14-2 chart triggers not perfect, if the overwhelming bottom is in place, you'll probably do this one. Now, that's an extra trade that's not with what we're talking about. All right, so look, here's a deeper retracement. And again, look, perhaps you went long over here. Perhaps you went long at the mid-band and had divergence. And, ultimately, look, they came down a little further. This is where our circle was. And we can ask ourselves to check the market flow at this spot. It's not real hard to see its support. Okay? Now, we're going to go through until we find one of our circles. Now, do you guys see how many different iterations of things there are on the small chart? There's a lot of crap on the small chart that happens that doesn't line up with the 14-2 chart. Right? I mean, you can see some other trend trades that pop up. Look at that. I mean, it's pretty obvious. The reason we didn't put a circle here is because it doesn't match with the 14-2 chart. So, again, there's extra things that you can do, and that's not what we're talking about here. We're talking about only 14-2 chart trades. But you're starting to get the idea just by looking at the chart that there's some additional opportunities, right? All right, these lined up with the 14-2 chart. So pull back to triggers, pull back to the mid-band, and divergences pretty much ruin that party. As we slide forward, again, this gets into just today, really, and yesterday. You can see we had a choppy day yesterday. So the 8-2 triggers never or the 14-2 chart triggers never really helped us. If you're in a choppy market, remember yesterday we went long right here in class. You remember that? We said because of the overwhelming bottom and the pivot stop out that we would do the first more assertive long. which again, as you guys are studying your charts, you'll be able to start seeing these. This is the one, and again, when they're obvious, they're obvious. This is the one where the large chart agreed, the 8-2 chart agreed, and the 5-1 chart agreed. Could you have made money? The answer is yes, obviously. Now, once we break through fibs, again, this is where we had a circle. Again, breaking fibs, mid bands, short, should be obvious to you, right? And then obviously we got kind of choppy in between support and resistance. And then today, right, today is the 29th, we had a couple of stab backs. So look, here's one stab back, but it's green. And again, this is where you're going to go in and you're going to check your market flow. Did you have a market flow signal there? Because the 14-2 chart said it was okay, did you have a market flow signal during the pullback? And that's going to get you into a trade. Now, I don't think we marked, this is going forward. So here's two more from this morning. And again, most of you guys did this short this morning, right? I mean, you guys had a short in here, and 63 was the price where you guys went short. And again, the 8-2 chart agreed, the 14-2 chart agreed, and the 5-1 chart agreed. And you guys all did that short. And then you did this short. And then you did a long over here. Pivot stop out at the edge. But look, now here's the next trade. And again, look, all of the charts agreed, and you had a pivot stop out long after support was reached. And you guys did this one, right? Now the market went up, and again, a pullback into what? And I think that was the end of it. So, again, we're going forward now in time, but again, this is where hopefully you guys had another short while we were doing our lessons. I'm not sure who did that one or not, but, and again, now we're in this situation. So look, let's go live real quick, and you guys tell me what's our situation live. What does the 14-2 chart triggers tell us? Do we want to go short now that we've reached synthetic triggers? So again, look how few and far between the ultra high probability trend trades are. When you guys go back and do these high probability trend trades, you're going to say to yourself, wow, there's only, 2-3 a day where they're really, really high probability. How else are we going to make our money? So look, let me go back now and let's look at our market flow chart here. And again, let's talk about all the spots where we said check the market flow. All right, so here's where we started. And again, I just want you guys to see super favorable trend trades are going to be easy for you, right? And again, when you have a red background and you have market flow buy signals, but you still want to go long, I want you to see the look. So again, look at the bar. I mean, obviously we had a yellow bar here, but this bar and the next bars, they're all very, very, very bullish signals. Stranded sellers with an antenna bar up. I mean, that's a long signal all day long for those who have the market flow. Now watch, we'll go through and we'll continue to look for some opportunities. So look, here's where we said, again, here was your short that we talked about. And then here's where we said, check the market flow. And again, look at what happened. Check the market flow for a little overrun. And again, I've also put the background color on here so it's easy. What happened? Stranded buyers with a yellow paint bar for a sell. All right, let's move forward. And again, we had to check the market flow here. We didn't really get a signal off of this one, so not very, very helpful in that one situation. And again, look, this was our pivot stop out at the edge of Fibs. So obviously, we won't go into that too much, but again, this is where we had, yesterday we had our long trade where that X is. The reason we had a long trade here is because we had a high volume area where we were buying support. We were buying market flow support coming off of support. Anyway, also useful. Now, we went down a little lower and we said, hey, we need to check the market flow for a signal. So again, look, this is the same type of thing that we look for every time. If you have an overrun on the big chart or the 8-2 chart, the market flow will catch the overrun for you. You guys understand that? The market flow is a one-bar event. It's the 14-2 chart still says we want to go long. The 8-2 chart said we're going to go deeper. And then you allow the market flow to generate your signal for you before you go long, and you end up having a reason to get in. And Carlos, this is what I was talking about with you. There's a lot of areas where you may want to get in. Again, I'm just going to move forward until I find the next one. I don't know if we had another one, did we? You may have a lot of reasons or spots where you want to get in, but you really need to have something like a market flow to help time that entry for you. Like this was that area, Carlos. If you had a market flow signal from the spot where you were looking at with your question, and again, I always like to go back to people's questions and refer to, what you were looking at a top or a bottom. This is where the market flow becomes a tiebreaker. So you wanted to go short, you saw everything was going down, and you pulled back into an area, but you didn't have a perfect pivot stop out, or you didn't have a perfect reason to go short. I'm just using your charts as an example. If you had a market flow signal at the top with the right conditions, then you could have taken it. And that's really, I think, where the market flow becomes most helpful. When you're in a situation where you're not quite sure of your trade, use the market flow. If you're in a situation where it's horrifically obvious that, your large chart, 14-2 chart says it's okay, your 8-2 chart says it's okay, you're going to do that trade. I mean, this is really the number one possible look that we have. Agreed? All three charts aligned, saying the same thing. You get probably, what would you guys say? I'm going to say what your results are, but if you have all three of these charts aligning the same way, large chart super favorable, 8-2 chart super favorable, and the area mid bands and fibs on the 5-1 chart, what would you guys say? I'd probably put it in the 75 to 80% range as far as winning percentage. They don't always happen that way, but when they do, they're ultra, ultra high probability. And the same is true, no matter what market you look at. When you have all of the fibs and all of the triggers and all of the rules in your favor, you really, look, if you're going to lose, this is the look to lose on. Dare them to come take your money. Now, I want to relate it back to the plan. Because again, when people look at the plan, sometimes they see too many things because there's a lot. And again, it's not, it's something that you are going to have to go back and study. You can take this trick, right? And again, look, you could go back, I don't know, let's go back. I can go back to the beginning of May or even further, right? I can go back to April and I can do the same thing. I can go in and draw circles where all the tails are. And then you go back and you study what happened on the small charts in those areas. And it doesn't take long for you to see the right pattern for trend trades. Now, the other pattern that we use, and again, this is why I tell people don't shy away from the tops or bottoms. Because, look, the time when you're supposed to stop doing trend trades, if you get the reason to do the counter trend trade, again, so when you're studying your chart, you're going to see that this over here was a perfect long trade. It's going to be obvious to you. You're also going to see that this is a trend trade short. But, again, 20 ticks up, pivot stop out at the top, 20 ticks down, trend trade short, 20 ticks down, and then pivot stop out at the bottom, 20 ticks up. Instead of just waiting for one high probability trend trade, you're going to turn it into 3 or 4 trades. And that's how you truly excel with what we do. Now, you're going to add in additional trades on top of that. You're going to add in what I call contextual high probability trades. Right? And what I mean by that is something happened that was so powerful at the top or bottom. So look, this is what I'm talking about. Let me just load up my indicators here. Contextually, something happened that was so strong for a top or bottom on the 14-2 chart that it allowed you to do trend trades before it was high probability. So, for example, like this. Contextually, look, multiple time frame fib support holds even if the small triggers aren't quite out of the gate yet, you can still do that trade. So this is the one we did the other day. Look, right here, just let me show you contextually. Right here, we had a pivot stop out of our Fibonacci support with all of our trigger lines still above, right? Again, this is contextually the best bottom look we can possibly have. Agreed? I mean, that's pretty much the mother lode for us. So when we go back to that spot, this is where, bear with me, I'll get back to that spot. This is where you can take a more assertive approach. Like we had this one yesterday. Look, here's your contextual, really, really, really strong bottom. No matter what happens, you're not going short anymore. Well, you can take the 8-2 chart and the 5-1 chart and you turn it into an extra trade long, which worked out really well. And then, after the bottom, if you didn't do the pivot stop out long, which would have been 20 ticks, then you do the extra trend trade, which would have been 20 ticks. And then ultimately after that, you do the high probability trend trade, which is an easy 20 ticks. So you can take the termination spot. So again, I want you to think about something for a second. In our trading plan, you can do trend trades until what? Until something happens that is major on the chart that says stop. So what I'm telling you is there's a bonus trade for you out there. If you get to fibs and mid bands touched by price, look, if you get a pivot stop out, great, you're trading the edge. If not, do you see this little tail right here? Can you see where I'm pointing right here in the middle? Contextually, this little 5182 trend trade is going to be a winner for you. It's not high probability because the small triggers are below, but contextually, that trade is going to be perfect. That's February 15th. We can go back and look at it, but do you see what I'm saying? Because of a stop condition, you can then be more assertive on the first trend trade coming out of there without a high probability. And then if it keeps going and you do get a high probability, then you got a bonus trade. This is how the users of our software end up making more money than everybody else, who really start to take advantage of everything that the software has to offer. In the beginning, we want you doing high probability trades that are super defensible, right? Super high probability pivot stop outs at the edges if you get them. Super high probability trend trades when you get them. And, then as you gain experience, you can add on the extra money. When you see traders of ours, who most of them stay very quiet, when they do $700, $800, $1,000, $1,200 per contract per day, this is what they're doing. They're taking all the advantages. And again, look, you may or may not be good enough to take all of the advantages, right? So again, this is where practice comes in. And again, look at our chart. Remember what we said live? We said that because we hit our synthetic triggers, we're no longer going to go short. So you might have had a short, but then after you hit that area, maybe you could have had a long trade. And when you start looking at it from the small chart perspective, you're like, okay, maybe I could have had a short, which again, you should have had a short right there. And then because of the large chart says no more shorts here due to up synthetic triggers, right? You have a big compelling reason why you're not going to go short anymore. Number one, you can take your profit. Number two, is there an opportunity? There's not a lot of good areas to work with here, but if there was some support to work with in this area, you might have been able to take an opportunity. Some of the other traders will do it anyway, even without a support, but if we had a fib support here, look, if there was a fib support from a chart, it would have been very, very, very easy contextually to take that trade long. Agreed? Because the large chart said no more, the 8-2 chart said we're going up, and what happened? And that's really what trading is all about. What do the three charts say? Right? And look, ultimately keep it simple. 14-2 chart for a trend trade has to be favorable or else don't do it. The 8-2 chart has to be favorable for a trend trade or don't do it. Does that make trend trades a little easier? Those are the only two that you should do absolutely 100%. With the 8-2 chart and the 14-2 chart agreeing and the areas being obvious on the small chart. That's your 100% trend trade, number one look. No matter what, you're going to take it no matter the outcome. The closer you get into the spot, the less you're going to end up risking and the more money you're going to end up making. You don't need to market flow on that one. If you want to do a trend trade because the 14-2 triggers say you must, but the 8-2 is on the wrong side, this is where you switch and use the market flow for your entry. Does that make sense? So instead of guessing or putting a limit order at a spot because it's perfect, you say, okay, I need a little more confirmation. Once you put this plan into effect, here, look, I'll give you a copy of that just so you have it. Simple. This is the trading plan, by the way. There's nothing new on this. Once you put this into effect where you're only going to do the right trend trades, and then you put a conditional trend trade entry with the market flow, if 8-2 triggers are on the wrong side, the world's going to open up to you. It's going to be like magic. And then, on top of that, you're going to add in edge trades where, you don't have a big trigger line breakout of a fib, and then perfect edge trade pivot stop outs. And again, those are really, really simple because you have to be at an edge, right? I mean, it has to be a clear edge, and you have to have a prior negative number, which makes a purple line, and then you're going to go short at the purple line retest. Or you're going to be at the edge of support, and you're going to have divergence, and it's going to make a cyan line, and you're going to go long at the cyan line, and you're going to hope for the best. One and done. Those are your trades. 3 trades. Technically 2 trend trades. Right? Super strong trend trades, you're going to put a limit at the spot. Pivot stop outs, you're going to place a limit order at the spot. You guys hear what I'm saying? These are not negotiable trades or rules. You're going to place a limit order at the top or the bottom only. That's the only place you can place your limit order. There's no guesswork. You're either going to win it or lose it. So there's no guesswork. If you have a perfect look, you're going to put a limit order at the spot. There's no guesswork. If the 14-2 chart says you still should be taking longs, right? So again, 14-2 chart says, hey, you should still be taking longs, but the 8-2 chart triggers are below. You're going to wait for a market flow signal to set you free and get you in. That is everything that you need to not only study, but you have to practice. So again, look, what we do is not confusing when you put it together properly. Start with the 8-2 chart. If the trigger lines are in the correct configuration, like let's just say right now they're in a correct configuration for going long. Agreed? This is live. This is our look for going long. Agreed? So let's look at the 8-2 chart. What do you see? I mean, obviously we hit a little fib up here. Should we take one more long trade from the mid bands and fibs with the look? Or is it the wrong look? Does this fib negate your look over here? This is the study work that you guys have to do. If you have a direct hit of fibs and divergence, does it stop you from doing your trend trade long at your midband and fibs? If it stops you, then you shouldn't be in a trade. If it doesn't stop you, or let's say the conditions change, maybe you lose 3 ticks. You had a long trade on the ES. Let me take a look at the ES here real quick. And again, look, the large chart still suggests that we should be going long, correct? So this is where, because the 8-2 chart is red and going down, you may say, hey, look, before I do a trade, I'm going to get a market flow signal. And if I don't get a market flow signal, I won't do a trade. Or, you could even say coming off of resistance, you'll need a market flow signal. The market flow becomes horrifically beneficial when used at the right spot under the right conditions, right? So again, market flow is helpful if you are in an iffy, no pun intended, spot. If you're at resistance and you're saying, well, maybe it might hold, it might not be a good idea to jump in front of the freight train. Let me wait for a long signal. Well, you never got a long signal. If you say, The 14.2 chart suggests, let me just show you, the 14.2 chart suggests that we are going to still go up. Now I will get in with a signal. You guys understand that? If it's not, I shouldn't use the word if. When it's not iffy and it's perfect and there's nothing against you, then you don't have any reason to worry, right? If you're trying to get in at a spot and you're saying, hey, I need to have, a signal like a market flow signal, this is where it might become beneficial for you. Because if you waited for that, then, again, look, obviously this is the area. We might still get down a little bit lower, but, again, the market flow is suggesting that this area has the potential to hold. See it? And again, what you end up with is again, reasons for doing what you do. Now, granted, maybe a pivot stop out at the edge of fibs might have been a good spot, but anyway, you guys get the idea. Market flow ends up helping when the rest of it doesn't. Now, when to use it, when not to use it. When to jump in, when to jump out. When not to jump in, when not to jump out. Steve, you got in at 88. Okay, so you just bought the pivot stop out at the area. Okay. All right. Now, is it a trend trade? So look, let me clean up. Is it a trend trade that we're doing, or should we be doing pivot stop outs from the edges? Because a trend trade ends when the trigger lines aren't like this, right? The trigger lines right now are down, but in between both the synthetic and, the areas. So, again, this is more of a pivot stop out from the spot look. And again, a pivot stop out from the spot's going to look more like this. Let me rephrase it for you. Questions, comments, concerns. And again, look, the biggest takeaway that I want you guys to do is to be able to go back in history, right? Have the benefit of going back in history and saying to yourself, what happened on all three charts at any one given spot? What did the 14.2 say? What did the 5.1 say? What did the 14.2, 8.2, and 5.1? Get those three down. And again, get them down in this scenario where if all three of them agree, you're going to do the trade with a limit order at the spot. Look, you're on simulator while you're learning. I would rather you have 37 trades over the course of a week that we can go back and study and analyze and put together and determine whether or not they were right or wrong than not doing trades. I would rather have you overtrade and do too many trades than undertrade. Does that make sense? So do the trades. Even if you lose them, it doesn't matter. Do the trades that you think you should be doing, when, where, and why. and then say, John, here's what I did. Here's why I did it. Here's the look. Here's what was going on. Here's why I thought we were going to buy the edge of fibs with a pivot stop out, right? Which would put us down in this area. And again, look, this doesn't technically have the perfect look, right? But it's not a counter trend trade. This is a trend trade, right? This is a pivot stop out with the trend. Agree? So, the idea in theory is to get in on the way down, not on the way up. So look, this is the edge of fibs. Agreed? And it's a pivot stop out at the edge of fibs, but the trend is up on the big chart. Do you guys understand this entry? And again, whether or not it's going to win or not, it's a whole nother scenario. We'll find out in a minute. But the reason for the trade. And again, look, I want you guys to write reasons. So look, when you guys are doing chat room stuff and you're saying, hey, John, I want to tell you why I did what I did. Okay? I want you to take a picture that's going to look like this. So just, capture all three screens so we can see what's happening when you're studying. This is when you're doing live trading or simulator trade. And I want you to describe what you see. Okay, so look, I'm going to put a little description on here, and I'm going to say synthetic triggers up, edge of multiple time frame fibs. Everybody agree? And again, same fibs over here. And then this was the pivot, and then this was the pivot stop out. Oops. And again, you can get as fancy as you want to get, but you guys see what I'm saying? Because if you do it this way, then we can go back and we can say, okay, the large chart was correct. This chart had a good area. You got a good entry. Think about something for just a second. If you do 75% winners, you must lose 1 out of 4 trades. Agreed? So, but you don't want to do trades that, watch. So watch, here's another label. Due to fibs and divergence, I should use market flow entry. Right? So you can go back and you can analyze these types of things and you can say, what happened here that caused me to lose 3 ticks here? What happened here that caused me to make 20 ticks? And when you post this into the chat room, right? So look, here's another picture you would take. So look, I'll post in the picture. This is the entry rule. And now I would post in my management rule to you. Watch. You don't have to write all the management rules. You just do one picture. But due to pivot up on the 5-1 chart, my stop is now below the pivot. So again, I started off risking 10 ticks, but now I've only got, you remember what I said the average is? I mean, the average is 6 ticks. So, again, this is very much in line with what the average stop normally is. Now it's a 6 tick risk to make 20. You guys see that? So instead of, and again, this is where getting in on the way down, even though it's a little scary, ends up giving you the best opportunity to win. But now I've only got 6 ticks of risk. And, conceivably there are trouble spots that you can get to that you could get your risk down a little bit lower. I'm not going to mess with it just for the sake of. Now, the other part about the market flow, think about this. One of the most beneficial signals that we have coming off of any given area is what we call a double market flow signal. And, again, Carlos, you and I were talking about this yesterday. If you're long from the low and then you get 2 signals in a row to the upside, it adds confidence to your position. Almost, you can go back and study this, but if you get the right spot and you have 2 signals in a row, if you lose, you lose. The risk is defined now, but usually this has a pretty good chance of some follow through. You guys understand that? Never a guarantee. There's no such thing as a guarantee. And again, we're still willing to risk 6 ticks on this. So, just to recap for you guys. This is the one I want you to ingrain in your head over and over and over 5,000 times. If you get the favorable triggers or favorable areas even on the big chart, look for this look on the 8-2 chart and then do these trend trades on the 5-1. Is everybody okay with this? I'm going to end the video here in just a second, so I want to make sure that you're 100% comfortable with what is the high probability look. And again, I need you to go study this, guys. You can't just watch it in class and become a part of you. This has to be something that you spend hours and hours and hours and hours studying because, look, the more you see it, the more confident you're going to be in the real world taking that trade. If you only hear about the theory and then you close your charts and you come back tomorrow and you see it in class, you're not going to have an overwhelming comfort level. When you go back and you do market replay, this is where market replay becomes super beneficial. In the study video that's on the site, look, and I'm talking about where you go in and download a week's worth of data. And one of the things I talk about is, in the replay video, is going back and replaying, but again, checking for looks. And sometimes replay is not about trading. Sometimes replay is about actually seeing a look and being comfortable that you're going to end up doing a trend trade with that look. And again, you're going to see the same theme over and over and over in what I do. The triggers are down, you're drawing circles, and ultimately you're saying, what happened on the small chart at that spot? What happened? Where am I going to get in? How am I going to get in? What are the triggers telling me? And, ultimately, I think we lost 6 ticks on that. Ultimately, you'll be more confident. Now, again, look, I want you to see the thought process. Is this the right trade to buy the thing again? Maybe I kind of messed that up a little bit, but look. Divergence. There's your pivot stop outline. Let's just say for grins and giggles, you're uncomfortable buying again. If you get a market flow signal, you may decide to buy again. Right? Because, there's our rules are typically met right here. Look. The rules are divergence, retest a divergence line. And then look, if for some reason you're uncomfortable when you get a buy signal in the market flow, white paint bar down and an arrow up, that's where you're going to end up getting another second chance. Josie, you're out +4. All right. And again, technically, look, our rules are, and again, you have to be confident in the rules, guys. The rule is to get an edge, to get a divergence, and to buy at the divergence line. Or sell at the divergence line or buy at the divergence line. Agreed? So in theory, we just had the rules. I mean, I was still doing one a little bit early, but in theory, we just had the rules be met. We just had divergence. We just retested the divergence low. Now, granted, I'm in from the wrong spot, but would you guys agree with that thought process? This was the divergence. This was the retest of the low. In theory, I should be long at 78. I'm not, but we're talking about too much stuff in class. You should be long at 78 with a 2-tick stop, not a 10-tick stop. And again, look, if you mess up something, right? So let's just say you just totally mess up and you say, John, this is where I got in. Okay? And again, look, watch how beautiful what we do is. Oops, hang on. I did that wrong. Bear with me. Watch the difference. When you take a picture and you say, John, I bought right here, right? And you post it in. And then I'm going to say, look, our rules are met over here. Rules are met at 57.78. And the risk for the rules equals 2 ticks. So what happens is, look, if it loses, right? If it loses with a wrong entry, one of the most scary things for new users is posting in a trade that just sucks and loses, right? And I appreciate it very much. I know nobody wants to be wrong. You guys, this is, and again, I'm doing it a little bit wrong here, and I want you to see it. The rules say buy this cyan line after the prior divergence. Do you guys understand that? When you mess it up, you're going to do the wrong thing and you're going to end up losing $100 versus 2 ticks, $20. And then you're going to be like, damn, I'm down $400 trying to go long. And it's either because, and the rules also say only do a counter trend trade once. If it doesn't work the first time, it doesn't work the second or third or fourth time. Do you guys understand that? The rules, and again, you got to go through the rules in the videos, but one and done on trading the edges. And the reason why is because if you keep buying the low, you're going to lose, and then you're going to lose, and you're going to lose, and you're going to be like, damn, I keep buying the low. And it's going to look really silly. You're going to be like, man, I've bought the low 3 times, 1, 2, 3, and not one of them have won. Do you guys understand? You can throw as much money at a bottom as you want. If you do it once and it doesn't win 20 ticks, don't do it again. It doesn't work the second or third or fourth time. You're going to keep buying lower markets and you're going to be really mad about it. Do you guys understand? And again, this is a good live thing with the rules. Obviously, the 8-2 chart says we're going down. And again, look, when you guys post in pictures, so Amit, this is yours. And this is the S&P. Okay. Now, Amit, again, look, this is a real good example of what we do. So let's look at all of your charts and let's analyze them together, okay? I agree with your trigger line configuration on the 14-2 chart. Okay? So watch. This is okay. Look. okay, for the first two triggers. Now, the third trigger is down here. This is where some of the issues come from, okay? Synthetic triggers not coming along for the ride. Do you see what I'm saying here, Amit? Again, this is what we do in class. So if the synthetic triggers don't come along for the ride, what happened on the smaller charts that maybe would have kept you out of that long trade? So look, smaller charts, fibs hold. Let's just leave it at that, okay? So the fibs hold on the small chart with a gap to synthetic triggers, right? So you had a transition, but a big gap, and the small chart holds. Now, it's easy for somebody to go back in history and understand why it failed, right? So look, when I go to the rules, and we say if you have a transition of your trigger lines, so look, here's the picture for the rules. Lower probability in a transition if you hit fibs and they hold. So Amit, when the fibs hold on the small chart, it ruins the transition look. So you see that rule? So your trade is this rule. And again, this is where posting pictures is of the utmost importance. You did a long based on what you thought. But when you look at it and you go, okay, the fibs hold when I have a transition look. You see how that changes the meaning of what you did? If you're only looking at the 14-2 chart, that's great. If it was in a number one look, that would be okay as well. It's not in a number one look. It's in a transition, and you got a big gap. So fibs play on the small charts. Amit, you see what I'm saying? And again, you know, a lot of people make this same mistake. They think they see trend trade when in fact it's just a big gap and it's going to go all the way down to 2782. Almost always they go back and get this gap. Here, let me go look at the market now live. Okay, so look, here's the live market. And lo and behold, they made it all the way down to close the gap. Pretty easy to see now, right? Everything's easy to see after the fact. So again, I think that you could have avoided this loss by implementing the rule. And then, you know, if the synthetic trigger lines hold and we go back up again, then it'll be okay because they've closed the gap. So look, it's horrifically important that you guys post your pictures, because if you're studying the wrong trade and you lose a trade that you should not have been doing and you're getting frustrated with your progress, how many of you have never posted a chart and you're frustrated with your progress? If you're honest to me, more than half of you will say yes. If you're honest. If you don't post in your pictures and you are not making progress, that's why you're not making progress, because you're doing something wrong and you're practicing the wrong trade. You can't practice the wrong trade. No matter how many times you practice the wrong trade, you're still not going to be better at it. Anyway, the importance of posting in charts. The importance of posting in pictures. And I don't care if you lose 22 times on simulator. For us to be able to go in and look at what happened and why did you lose and how many times did you go long at the edge and why, then you're going to be able to quickly and very clearly fix your problem. Very quickly and very clearly. If you don't participate, I have found that most people have a tendency to flounder for a long time when they don't participate. So participation is key to the process. And look, it's your money. If you want to flounder around and practice the wrong stuff for 6 months before you get serious, it's up to you. I would prefer that you just go right into practicing the right trades with the right look at the right spot at the right time for the right reasons sooner than later so you can start making money now. It's a little humiliation, I understand, but I'll do losers just to show you it's okay to do a loser. It doesn't matter. Is this the right trade to go short? You guys tell me. Is this the right trade with these triggers? Yes or no? I'm putting you on the spot. Chris says yes, 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 yes. Okay. Let's look at the 8-2 chart. The 8-2 triggers are below, right? And they're down pretty strong, so there's probably very little chance of going back up real strong. So the question becomes, with the 8-2 chart strong down, should we be waiting for all of this up here? So look, should we be getting short right here? Or should we be getting short up here? If the 8-2 triggers are down strong, which one is the correct entry? These are the things you guys have to practice. So watch. And again, look, I can only, talk about it so many freaking times before you guys have to do it. But do you guys see what I'm saying? You have to have a 100% cause and effect. I will do this because. I will get in here because. I will enter at this spot because. All right, guys, let me catch just a couple more of your pictures and I'll end this little tutorial. Again, look, I don't think this is the wrong trade here, Skipper. Again, like we talked about, the rules technically get you in a lot closer to the edge, but you also managed it a little bit tighter as well, coming off of a trouble spot. So had you got in a little closer, again, you turned it into a break even, which is fine. But again, I think the ultimate entry is either from the edge or from the divergence line, and then you can really manage a lot better. Yeah. But again, look, as long as you understand why it's a little bit late, and then, you may even go back and say to yourself, look, with this strong of a trigger line look, I may not do it the second time, or you may do it either way. All right, Carlos, let me look at your question. Bear with me here. Carlos, that is your long. The 8-2 triggers are above the large. You should be long at 80 on that picture. I mean, they may get down to 74, but when they're that strong, probably 80 or nothing, I'd imagine. Should have been long from down here, 57.20. Right? You are all right. Anyway. And again, guys, look, sometimes you just have to lose and practice and practice and practice and say, look, this is where I'm going to go one more and then I'll stop the video. But look, in the trading plan, it says that you should track each of your trades in a spreadsheet. So look, here's the spreadsheet. And again, look, here's a link to it. You guys can download it if you wish. When you click on that link, go to File and then Download As and Save as Microsoft Excel. And then you can edit yourself. And again, what you want to do, and you don't have to do this much work if you don't want to. I appreciate, some people are very, very OCD and some people aren't. So again, what you really need is these columns right here, no matter what. You need what's your first profit, what's your second profit, and more importantly than any profit or anything else is this right here. You need to have an accounting of what was your trade, right? Where did you get in? What was the trigger line look? What did the 8-2 chart say? Did you get in at the right spot? Should you have gone again with the pivot stop out when the 8-2 didn't agree? Right? And again, this starts the whole debate of the look, the trade. And if you don't have a picture of what you did and when you did it, how are you ever going to be consistent? Why would you do it again? Why would you not? What's the look? Which trades win for you and which trades lose? Right? Why would we get in at 74 and not wait for 79? This is the reason why we're getting in at 74, win, lose, or draw, 73, whatever. Because the look of the triggers was really strong down, so it's going to be the first spot. And again, could it go to the second spot? Sure, it could. Could it lose? Absolutely. There's nothing worse than having a trade that you know is coming and you know is going to be a winner, and you miss the entry because you were waiting for 81, right? I'm waiting for 82 and it never comes. Isn't that the worst? Why does it not come? That's the question that we're answering. Why didn't it get to 81 or 82? Why did it go from 74? How are you going to be able to do the same thing the same way every single time over and over and over? By the way, here's your S&P. We closed the gap like we talked about. And now look, if we get a little, again, if we get a little bit more of an assertive look, since we closed the gap, who went long? Amit, you went long? Now maybe you get a little more assertive look that you close the gap where you can go in and buy the S&P. So look, there was all of your reasons why, and then look, this is the more assertive entry, the extra bonus entry. You see what I'm saying? So you allowed the big chart to dictate when to finally stop going short, and then now we're going to get on a more assertive entry for a long trade right here. It's not a high probability long trade yet. It's an assertive entry. Look at the 14-2 chart. We have divergence, the triggers held, the triggers roll, and we're talking about, not a high probability entry, but a bonus type entry here. Anyway, food for thought. All right, guys. Now, look, anytime you get within 1 tick of a reversal bar and you have a little fib in the way, and look, there's our pivot down. So look, our real risk getting in on this trend trade short started out at 10 ticks. And again, we got in at this spot because of what the 8-2 chart said. Does everybody get that? 8-2 said this was the spot. And again, if we get divergence, then that's going to be the end of the trade, and it'll go up to the second spot, and then we'll go short again up here. But 8-2 said this was the spot. If you were waiting for a higher number, you got screwed out of your money. You missed it. Agreed? And we don't want that. We don't want you to miss your money because you get the wrong spot. 8-2 says it's the right spot. You do it, and then, usually things work out okay. Sometimes they lose, but again, the risk that we take is no more than 10 ticks. And the risk that's actual once we get a pivot ended up being, 4 ticks risk? So 4 to make 20 or better, not a bad scenario. Again, go back and study. What did the 8-2 chart look like when you took that trend trade? Everybody got the point today? Pretty easy. That's a really good finish to the proper trend trade from the proper spot. 20 ticks, pretty easy. And again, look, the large chart's going to still agree with going short if we get up to here. Can we agree to that? If the market runs back up to 78 or 80, the large chart still says sell. So if it does, the 8-2 chart will say use market flow entries if we get back up there. So again, we get the first 20. Maybe it makes a deeper retracement. You do it again with the market flow. All right, guys, I'm going to end the lesson video now. If you guys have questions, let me know. Obviously, look, what I want you to do is take trades, take pictures. We'll double check what you've done versus the rules. And if you're doing it perfectly with the rules and with what the indicators say, you don't have to post charts anymore. Once you actually have graduated and you know the rules, I don't care if you post charts or not. I only want you to post them so we can make sure that you know the rules. That's the only reason. All right, that's going to conclude this lesson in the video.